All right, guys, so it's no secret that retail sentiment is absolutely in the gutter right now. Most retail investors have already panic sold at big losses, and influencers on crypto Twitter are saying that the bull market is over. Capitulations across the board. But here's the kicker. While regular folks like you and I are understandably scared, Wall Street billionaires, aka the same guys who once called Bitcoin a scam, are quietly buying billions and billions of dollars worth of crypto right now. I'm talking BlackRock, Goldman Sachs, and JP Morgan. They've all been going all in during this crash. But what exactly do these billionaires and mega funds know that we don't? Hey everyone, I'm Dan, one of the new hosts for Coinsider. And in this video, I'm going to break down exactly why the richest investors in the world are doubling down and how you can position yourself alongside them before it's too late. But before we get there, I gotta say that scrolling through crypto Twitter feels like attending a funeral these days. Like I've never seen so many people just completely give up all at once. I mean, sure, the market is down over 30% from its highs, with some coins down 90% or more, but the fear and greed index went so low that it hit the extreme fear levels we haven't seen since the FTX collapse. So you'd think that with retail tapping out so hard, there must have been some kind of catastrophic news, right? Some massive hack, or SEC crackdowns perhaps, a black swan event. But no, it's actually been quite the opposite. We've mostly seen positive development after positive development. You see, while regular folks have been running for the hills, big banks like Morgan Stanley and JP Morgan have actually been advising their clients to get some exposure and allocate some of their money into crypto. So what gives? What is going on here? This disconnect makes zero sense unless you understand what's really happening behind the scenes. You see, a perfect storm of fear is creating the exact conditions that smart money has been waiting for. They're not just buying crypto. Nope, they're doubling down hard. Okay, so over the last few months, we've witnessed the most powerful wealth managers on the planet do a complete 180 on crypto. Remember back in 2017, when BlackRock's Larry Fink labeled Bitcoin an index of money laundering? Well, now he's literally shilling it at Davos, declaring it a legitimate asset and predicting a $700,000 price tag per coin. Kevin Griffin, the billionaire founder of Citadel, is another one. The guy literally called crypto a jihadist call against the dollar. But now he's admitting his Tulip Mania Bitcoin call a few years back was a mistake. And that we all have FOMO. Yeah, no kidding. Even Ray Dalio went from Bitcoin is a bubble to personally owning and declaring it as one hell of an invention. Reverend Howard, one of the biggest hedge funds in the world, also says institutions are close to diving into crypto after years of wariness. And last year, their digital asset unit is up over 52%. And then, just look at the banks. Morgan Stanley, as well as Bank of America, went from totally dismissing crypto to now going out of their way to offer it as a service. However, all of their collective switching of stances is hardly surprising to me. I don't think they all had this aha, we get it now moment come out of nowhere. Nah. I think they knew the potential all along. They are smart money after all. A classic case of misdirect. Watch what the smart money does, not what they say. And back then, the smart play for them was to make moves in the shadows in order to position themselves in the best possible way. But now that they are ready, it's time to switch gears and be public with their intentions. And I know words are one thing, but these titans aren't just talking. Nope, they're putting serious money where their mouths are. For example, BlackRock didn't just launch a Bitcoin ETF. Nah, they're also adding Bitcoin to their model portfolios, which they use for millions of their clients. This is the world's largest asset manager we're talking about. Citadel Securities, who totally trashed crypto before, are now planning major crypto market making operations. That's huge for liquidity. Clearstream, one of the world's largest security depositories that processes trillions in transactions, is launching Bitcoin and Ethereum custody services. Even major traditional banks like BBVA in Spain are offering direct crypto trading to clients. And get this, Guggenheim is tokenizing $20 million in commercial paper on Ethereum. That's real financial assets moving on-chain, not some theoretical use case. At the same time, crypto-native exchanges Kraken, Gemini, and BitGo are preparing for their own IPOs, getting ready to fully graduate to Wall Street. So this transformation from the Wild Wild West to Wall Street is happening right before our eyes in real time. A recent survey showed that 63% of institutional investors plan to increase their crypto allocations in the next 3 to 6 months. We're talking about billions in potential capital heading towards the crypto ecosystem, and they're buying right now, while retail is selling. If that doesn't make you stop and think, I don't know what will. Okay, but here's the billion-dollar question. Why are they so bullish while everyone else is freaking out? Like, what do they know that we don't? Well, first of all, those regulatory nightmares that were hanging over crypto, they're finally clearing up, which is huge. The roadblocks that prevented institutions from getting involved are being removed all at once, and the timing could not be more perfect. The SEC is dropping lawsuits against Binance, Coinbase, and others. Operation Choke Point 2.0 is ending, and of course, Trump's pro-crypto stance is a complete paradigm shift. I mean, the guy literally signed an executive order creating a strategic Bitcoin reserve. So the argument that the government will destroy crypto has completely dissolved. There's finally permission to build in the crypto space. Secondly, stablecoins are becoming mainstream payment infrastructure. This is the bridge that's finally connecting traditional finance to crypto. The US Treasury Secretary literally said we are going to keep the US dollar the dominant reserve currency in the world, and we will use stablecoins to do that. This would have been unbelievable to hear just a year ago, and it tells you everything you need to know. Banks are rushing into the stablecoin space because they see it as the future of payments, and they don't want to be last one on board. Thirdly, real-world asset tokenization is gaining some serious traction. This isn't some far-off vision anymore. It's happening right now. For example, tokenized treasury bonds have exceeded $5 billion in assets recently and are growing fast. And finally, crypto as a technology is coming of age. It's maturing. The infrastructure is finally reaching the point where institutions feel comfortable using it and building on it. DeFi protocols are becoming sophisticated enough for institutional requirements, and blockchain isn't some buzzword anymore. It's becoming the pipes and plumbing for enterprise adoption at scale. So the tech is absolutely ready. The regulatory hurdles are clearing, and that's exactly why institutions are moving in. But anyways, the smart money's doubling down. Awesome, right? But what's that mean for us? Well, this gap we're seeing when institutions are buying while retail is dumping sets up this rare asymmetric bet. You see, smart money stacks their chips months before retail sentiment bounces back, and that's your window right there. The bigger the disconnect between the price and what institutions are up to, the fatter the opportunity is for you. And honestly, we're staring at one of the biggest disconnects in crypto history right now. You've probably heard the saying, buy when there's blood in the streets. Yeah, well, it's true. The juiciest opportunities in market history pop up when everyone's too freaking scared to move. So if you can manage your emotions and use that extreme retail fear as your buy signal, while institutional wallets are opening up, that's the key, and that's the money shot. All right, so here's the deal. We're currently at a crossroads that most people don't even see. While the crowd is freaking out over the storm, you've now tuned into what the smart money sees, which is clear skies ahead. As for me, well, I'm betting we'll look back at this time as the dividing line. Those who caught onto the institutional playbook versus those who just followed the herd. But hey, if you've stuck with me this far and still think the bull market is over and that the doom and gloom influences are indeed correct, then you gotta check out this video from my co-host Josh. He digs into that exact question with some thought-provoking insights.